Good day, money masters and treasure hunters. Welcome to the February 1st fantastic Friday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Hour 1 for Tom this evening. Tom will be with you for Hour 2, coming live from Denver, Colorado. And, folks, if you are in the Denver area, Tom and Daryl will be doing a workshop tomorrow. You can get all the details on the homepage of TFNN.com. You can still sign up for it. It's from 8:30 to 12 noon. And this is a program, if you are in the area, that would be the best investment of your time. Now, for those of you not familiar with me, I kick things off for TFNN each day at 9 a.m. with my opening bell call on the Trader's Edge, followed up by the Money Masters show from 10 to 11. I'm the author of Mastering Probability, a newsletter service for investing and trading, sent out by 8 o'clock each day, covering the equity, futures, forex, commodity, and worldwide markets. And, folks, I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call a smile. Breeds a smile. Now, smile, folks, and the world will smile with you. Everyone, and I mean everyone, likes to be around someone who smiles. So two strangers can pass in the street, and if one of them smiles, the other is likely to smile in return. It's Friday. You're going to be out this weekend. Test it out for yourself. I guarantee you it'll work. Smiling is a gift that we can pass on to everyone that we meet, let alone the gift that we give to ourselves, folks. And the only cost of this gift is just a little effort. A smile, folks, is contagious, and it starts with you. The bulls in the market were absolutely smiling today. You had the Dow finish up over 14,000, out at 14,009.79, up 149 points. S&P closing out the session at 15,1317, up 15 points. You had the NASDAQ Composite closing out at 3179. That's up 36.97 points, up 1 2/10%. The Russell 2000, a strong showing as well, up 9 points, closing out at 911.18. New York Stock Exchange up 81 points as well. That was up almost a full percentage point. Our call-in number is 877-927-6648. Would love to hear from you. You can smile upon me and give us a call. We can take a look at your stock. Let's go take a look at these markets. We're going to start off by taking a look at the S&P 500. In fact, we'll take a look at each of the indexes out here. For you bulls, the good news is the candle formation that formed today. I rank candles, let's say, from 1 to 10 out there, with 1 being the most bullish, or if you were taking a look at a bullish candle, and 10 would be the least bullish out here. Well, today's candle, take a look at today in the S&P. This is a type 1. This is a strong candle formation. Volume, absolutely suspect out there. But with regard to this type of candle formation, do you get a reversal right away out of this type of candle? No, you do not. In fact, take a look at, if you're watching us on Tiger TV, what you can see, just take a look at these candles. We saw this type of candle back on January 2nd. You saw this type of candle back here on December 17th. You saw this candle coming off of the November 16th lows on November 18th. Go back and take a look at your charts and see how often you would get a real quick reversal off of a candle like that. Now, that's kind of interesting, because when we take a look at the patterns that are out here, there is absolutely divergence. There are patterns that have completed. If we take a look at the S&P 500, we're looking at a 3 drive to a top pattern. There's a butterfly pattern that is out there, a 1.272 expansion. These are important patterns. These are important patterns both for bulls and for bears out here. Normally you would see a reversal. Will you see a reversal right away on Monday? Doesn't look like it based on this type 1, what we'll call type 1 strength candle formation. However, what we did see, even though the markets are in overbought territory, using the relative strength indicator, you made a higher high today with less relative strength. That's not a good thing. You don't want to see that on a day like today. And we're going to take a look at the volumes when we go over into the ETF structure. But let's go take a look at the Dow, see what the Dow did, take a look at the patterns inside the Dow. Well, we know the Dow closing up over the 14,000 number. That, too, having a 3 drive to a top pattern that really completed yesterday. But today is okay. It's still inside the range, closing, getting up to a high here of 14,979. And closing at the high was 14,019.78. I apologize. The close was 14,009 out there. Still a very strong candle, if this area is going to fail. If it's going to fail. And if you take a look at the Dow, also making newer highs, but with less relative strength. Not a good thing, not what you would expect in a breakout session. If we take a look at where the next move could go, if the bulls decide to bust this out and bust them up, 14,397 would be next on the level. That would be a 1.6 rate expansion just simply off of the September 14th or October 5th. We'll use October 5th high all the way down to the November 16th low out there. That is on the Dow. Let's go take a look at the Russell 2000. Russell 2000, which has been one of the strongest indexes out here. The bulls trampled the bears that came into the market. The bears had a one-day wonder. That was on January 30th, moving out of overbought just slightly into the out of overbought condition. Of course, today the same thing. You have the Russell 2000 making a higher high with less relative strength. You would have thought that with the RSVPs that were sent out, that we wouldn't have seen that at all. We would have seen all kinds of strength inside the marketplace out here. If you do take a look at the Russell 2000, where could that head to next? Well, there's a 1-to-1 A to B equals CD pattern that would take you up to 917. 933 is also game. That is a 1.618 expansion of the swing points, going back from the highs of September 14th down to lows of November 16th. The bulls, though, and the bears, they're out there making signs. No question the bulls won the victory today and for the weekend, so they're going to go home gloating, most certainly. But be careful, because there are absolutely signals out here in the marketplace that say you do not need to be chasing this. You do not need to be chasing this. You want to see a nice little healthy pullback. Let's go take a look at the NDX 100, see what the NDX did. The NDX is the one thing that could really drive these markets higher. As we take a look at the NDX, the markets today went back and they rescued the abandoned baby top. That abandoned baby top right out there from January 23rd, the NASDAQ 100 finishing out the session inside there. There is an A to B equals CD up that could take the NASDAQ 100 up to 2817 easily. Of course, it would help if Apple participated. Apple did not participate today. In fact, Apple down about $2. No great shakes, but Apple not participating. You had Google leading the charge up with $19. That was up almost 3%. Google getting up above its highs. Intuitive Surgical up about 1.6%. That was up $9 and change. But as we take a look at the NDX 100, there is a confirmed A to B equals CD up that would take you up to 2817. That is, and the NDX 100 is far from overbought or oversold. It's really kind of in the middle of the stream. So that would be the driver to these markets moving higher out here. If we take a look at the New York Stock Exchange, the New York Stock Exchange completed a 1.618 butterfly pattern. That still is in place. These are reversal areas. You got to be careful. Made a higher high today, less relative strength. Those are cautionary signs. If we go take a look at the ETFs and we talk about volume, today the diamond's up on 5 million. They were down on 5 million a trading session or two ago. The SPY's up on 115 million. Down, though, on 137 million. We'll go take a look at that. The Q's up on 35. Down on 34. Kind of a draw if we take a look at the Qs. How about the IWM? Up on 31, down on 39. Almost sounds like potentially a little bit of distribution going on up at these highs. So let's start off and take a look at the SPYs. You'll see the pattern if you're watching us on Tiger TV. You'll see the 1.272 butterfly out here. If we take a look at today's trading session, now that we've got a little bit more volume in, up with 126, and that was after coming down with 137 on January 30th. You want to know where could this market run to if it's going to move higher? Well, if it's going to bust this pattern, which is the 1.272 expansion, and 151.76 is actually the number. The SPYs only made it up to 151.42, so close enough for my work, but still not anywhere near outside of the range of a butterfly sell pattern. That is when the market is stretched. And the next level would be 156.40 on the SPYs. That's assuming, I would say, the SPYs close above 152.50, 153, something like that. That's what you would be looking for. And we're going to go inside the SPYs and take a look at the sectors with inside there, see what kind of signals those might be giving to us. If we take a look at the diamonds, interestingly here, the diamonds today, they were down, let's see here, up today with, as I mentioned, 5.2 million shares 2 trading sessions ago, down with 5.5. Doesn't sound like the right volume mixture for a day when you're closing up above 14,000. I know the bulls were out, no question about it, and the candles that were formed, those were bulls. They trampled the bears, but they weren't doing it in earnest. It was as if they were missing some of you out there getting into the market. Don't do it. Do not chase this market out here. Wait for a pullback. 877-927-6648. That's our call-in number. Would love to hear from you. We had gold finishing out at 1668, silver at 3182. Why didn't they rally along with the markets? We'll be right back, folks.